Welcome back to the channel. It's a bit cold here, so don't mind this. I'm going to cover my, legs. Now, it's been a while, but I'm back. Okay, I've organized the bullet points here because this is going to be a bit of a long video, longish video. Now, I'm going to talk about Forex trading. I tried it a little bit so that you guys don't have to try it. And you've seen all over social media, it seems like the current in thing among, the youth and elite guys here and there is Forex trading. Everyone who seems to have some quick, good amount of cash on investigation say that they have been doing Forex trading and that's where their source of funds is, You guys can name them in the comment section below. So I'm going to give you an overview of what Forex trading is all about so that, you can get to understand it. Let's first do an introduction. What is Forex trading? This is just buying and selling money in short, to try and make a profit. So value of money tends to fluctuate, as we all know. You all hear that, the Kenyan shilling is now 130 bob against the dollar. Or sometimes you hear that it's now 160 and everyone is complaining because the prices of everything has skyrocketed. Yes, currencies have shifting value. So in Forex trading, basically you are trying to buy a certain currency. Say you could be buying $1 and hoping that, the value of the dollar might go up. So I will sell it at a profit. That's basic Forex trading. But it goes a bit more detailed than that, as you may imagine. So this whole idea of Forex trading originated in the 1970s when majority of countries started moving to what is called a floating exchange rate. Before that, there was more like a fixed exchange rate where central banks in many countries would basically set their, exchange rate, their value of their currency. But with a floating exchange rate, a country's currencies respond to market forces like supply and demand, Something big happens in Britain and everyone thinks that the economy of Britain is going to do well. So somehow everyone wants to have some British pounds in their pocket. So the value of the British pound goes up, you get. Now, this whole idea of Forex trading is not just a local thing, Kenyan thing or something. It's not just a social media thing. It's actually a big thing. It's probably the biggest global trade, as it were, Buying and selling of money is probably even bigger than buying and selling of maize and tea and coffee. What many people do in Kenya or around social media is just, the tip of the iceberg. It's very small. It's very small compared to what is happening out there. Now, let's look at the process of Forex trading. And this is the section where I draw for you stuff. So money is bought and sold in currency pairs. There's something called a currency pair. So it's basically comparing one currency to another. Let's take an example. We can be trading USD GBP. So basically this is the United States dollar versus the Great Britain pound. So maybe the value of this currency pair can be 1.053, for example. It means that $1 is sort of equal to 1.053 pounds. Now we'll be trading the fact that the value of the USD against the GBP might go up or might go down. So we can decide and buy or take a buying position if we feel like the value of the GBP will go up against the USD, or we can decide and take a selling position if we feel like the value of the GBP will go down against the USD. So basically we are trading currency pairs. Another currency pair could be something like maybe USD versus the Japanese yen, for example. So it's not like going to the market, buying US dollars and keeping it in your wallet or something and hoping that at some point its value will go up, then going back and selling it. We are just playing around with currency pairs. So what one needs to understand basically is the bid price, if you're taking a buying position, or the sell price if you're taking a selling position. Okay, now, you can't just walk to your computer and decide that, I'm going to start buying and selling Forex. You can't, because you need a broker and you need a trading platform. Why do you need this? In short, it's because the amount of money you want to spend is far too little to bother people with. This guy is walking around with Mercedes-Benz, limousines, and so on, and they say that they did that from Forex trading. Have too little money to actually engage in Forex trading. Now, what happens is your broker actually acts as your middleman. You give your money to your broker, then your broker sort of buys or sells for you. For example, if you decide that you're taking a selling position, you want to sell this currency pair because you think that its value is going to increase, so you are hoping to snatch some profit. If you're taking a selling position, it's not like you have any USD or any GBP anywhere. You actually are just playing the game with the facilitation of your broker. Now, there are many brokers, so many brokers out there. A good thing is to take a broker that is sort of licensed in your country. For example, in Kenya, HF Markets, you can find out their website and so on and find out about them. This is like a local broker. Then there's another one like Pepperstone, for example, which is an international company, but they actually do offer some brokerage services in Kenya. Now, with your broker comes a trading platform. You guys see in Forex videos some graphs going up and down, and people have screens and so on. Let me just give you an example. Okay, now over here we are on the trading platform called TradingView. Let me show you how a trading platform works. So basically we've logged in and we can choose, say we are going to be trading Bitcoin versus USD. And you can see right now one Bitcoin is around 60,000 USD. So all this chart and stuff that you normally see all these Forex traders flaunting around is usually basically just a trading platform. Now, these charts indicate the value of the trading pair at a given point in time. It could be a week, a month, a few hours, even a few minutes. Then something else to understand is a trading session. Apart from this online trading that a lot of guys will be doing, there is actually like the big guys who are trading as their day job for different companies and so on in different stock markets. And the biggest ones in this case that will be determining a lot of how you will be trading as a Kenyan is the US market, that's like New York. Then there's Great Britain, the London trading session, and there's the Japanese trading session that is like Tokyo. So knowing the times for those three sessions are important because that's when trading will be active. There'll be a lot of movement of currencies, here and there. Okay, there's many other videos on YouTube which will give you a lot of details and technical aspects of Forex trading. I'm just giving you an overview so that you understand before I give you my personal impression, my opinions, my experience. So apart from what I've explained, there's many other concepts you might want to learn before engaging in this whole business. You might want to learn about how currency pairs actually are traded, pips, lots, and so on. Then there's a whole new world of something called technical analysis where people actually look at these graphs, look at trends, use tools like some stuff you'll see here called, a Fibonacci retracement. And there's so much other stuff that is looked at so that you can decide whether to buy or sell. Basically, it's trying to predict the market by doing some sort of technical analysis. And sometimes there's strategies. You'll hear these guys talking about my strategy is this and that. My strategy is this and that. So before I actually go into my own experience, let's look at some pros and cons of Forex trading so you know what you are dipping your toes into. First, this Forex trading, is it a scam? Is it something that is actually there or people are, just lying around? So, it's true, this is a legitimate trade, but it involves a lot of risk. So there's some pros, there's actually some advantages to Forex trading. Like, there's a high liquidity, a lot of money is moving around, and it's a 24-hour market. You can get in, get out at whatever time, though, as I've told you, it's good to know the sessions, the main trading sessions, London, New York, Tokyo. But this is business that you could do even past midnight and so on, make money if you are making money. Then number two, compared to other kinds of, investments, like say putting your money in a bank, in a fixed deposit account and waiting for, some sort of interest, and there'll be some charges by the bank. Forex trading generally has kind of low charges, like what is called spreads. And that's the difference between the real value of the trade you're making versus what your broker is giving you so that they can get a commission from it. So generally, it's quite a small fee compared to other markets. And there's also the issue of leverage that we've talked about. Basically, in Forex, you can trade big monies even though you actually don't have them. It's an advantage because, your broker will give you some sort of leverage that in other markets that are not Forex, you will not enjoy. Yeah, and another advantage of Forex trading is actually the availability and accessibility of all these online platforms. So it's easy to get in. You don't have to go to a stockbroker physically and so on. Nowadays, everything is happening online, basically for day traders, like what you will be if you want to be a stock trader. It's just easy as long as you learn the concepts, you learn the concepts, or else you'll lose your money. And there's also a bunch of disadvantages that you need to be sure you've taken note of, like the high risk, high volatility. Prices of even soybeans are traded in Forex, and these prices tend to fluctuate every now and then. You could just imagine that from all your nice strategy and all the technical research you've done, that the price of, say, USD JPY is going to be going up in the next 2-3 hours. So you decide to buy right now so that you can sell in the next 2-3 hours. Then it drops rapidly, and you lose thousands upon thousands of your money. Another disadvantage is the fact that, as you have seen, this is a complex affair. There's a learning curve. You need to spend a lot of time, probably watch a lot of YouTube videos to even just understand what a pip is, what a lot is. Then, like we already mentioned, this issue of leverage can actually be a disadvantage, because in as much as it amplifies your profits, you could trade with $50,000 even though you don't have it and make a profit of, say, $5,000, and you'll actually get that profit. Maybe your stockbroker charges like 5% commission, they'll take like 500, then you get 4,500. That's a lot of money you can make, but you will also make huge losses if it goes the other way around. So like if you are trading with $50,000, maybe you only had $1,000 and your stockbroker's given you a massive leverage. So you're trading with $50,000. If you make a $5,000 loss, that $1,000 that you actually had disappears very quickly, plus a commission which they will still take. Leverage amplifies your losses. And there is the emotional aspect. There is the whole stress that comes with this thing. You just watch your money go, your heart, goes into palpitations. It goes into arrhythmia, and you start developing a cardiogenic shock. Anyway, if you don't have some nerves of steel, you better not engage in Forex trading. Okay, so this is what happened to me, my experience. Now, for the sake of experimentation and to make this video, I decided to waste some money. I chose TradingView as the trading platform of choice simply because there's a lot of tutorials on the interwebs, on YouTube and so on, guys using TradingView. So I knew I could learn TradingView faster than whatever other platform. Now, in Kenya, I had chosen two brokers. There's the HFM, because you just saw someone on YouTube using HFM. But the problem is HFM were not offering TradingView as a platform. And then there was Pepperstone. And Pepperstone were offering TradingView as a platform. So I decided to go with Pepperstone. So I made 2 transactions, as you can see here, in terms of deposits. On 22nd of May, via M-Pesa, I deposited $37. That's like 4,500 thereabouts. And oh, it's already been 4 months. Time is flying. And on 25th of May, I deposited a whole $62. Oh my God. And that was by M-Pesa. So let's look at withdrawals. So as you can see, on 3rd of June, that's like a few days later, I withdrew $34. So I lost 60 something dollars in this. That's close to 8,000 bob in this experiment. Everyone who tries Forex loses money at some point. During those few days that I did the trades, I actually sort of more than doubled the amount that I had deposited. I was very cautious and everything. That $99 at some point was 200 and I don't know, 50 and something. I had like more than doubled it until one miserable transaction. Let me not say it. One miserable day when everything just disappeared. And I was left with $34 and I decided, oh, I'm not going to lose all my money. Let me just rescue this $34. So it happens to probably everyone, all beginners. My advice would be, number 1, don't be like me. Like when I had made more than $100 above what I had deposited, I should have gotten out that $100. I don't know what I was thinking. Because basically the type of trading that we were doing here is called scalping. Most guys actually do scalping. It's just like trading over 5-minute intervals, 10 minutes. I wouldn't have lost money if I would be comfortable with taking very little profit. So make sure you actually start small, invest little money that you can afford to lose if you're going to do this thing. But practice with a demo account first and know that you'll still lose your money because it's simple. No one can predict the future. So is this Forex trading betting? I would say yes and no. Yes, because you don't know what will happen. Anything can happen, like with your money. And no, because it's like some sort of defined science. It's just not people playing football somewhere and hoping this team will score. It's something that at some point it's predictable. Like if you actually have very good strategies, you are looking at the market trends, you are looking at politics, economics, finance, current affairs, and so on. It's science that is predictable. Like you can actually know that a certain trading pair might go up or might go down. So it's not 100% betting, I will say. See you guys in the next video. As always, no pressure.